Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look again on the gold market. So here's a lot of similar things compared to the euro currency, but still there are a few differences that we have here as well. In general, gold market is becoming a bit less sensitive to performance of the United States dollar purely and get some, let's call it as independent driving factors that mostly comes from the political situation and turmoil on the cryptocurrency markets. So all this stuff makes investors to more and more take a look in the real safe haven in the gold market. And actually, I think that besides of the actually recent common trend that relates to CPI numbers, the Jerome Powell speech and so on, here we still have some component of the investors' mentality change. So I think that it might be the real reassessment of the current situation. So we have an in-depth view today in a report on the political situation in the United States and explains how it could impact on the performance on the gold market and what the critical moments exist. Because it's really difficult to, get it clear under the big amount of the news headlines, speeches, and so on. So a lot of noise around this topic, but we should understand what the major actually thing that stands behind of these elections. This is not just the victory of one of the parties. This is two different ways of the development of the economy and the society in the United States. Current results, they are not actually suitable to any party. As for Democrats, as the Republicans, and this is also one of the scenarios that brings nothing really positive, because the energy is not really good for any country. So if you're interested with this topic, you could read the report as usual. In the short-term perspective, what we could say, gold currently stands at strong overbought on the daily chart as well as in the year, but at the same time the major target is not completed. So as market already succeeded the P point here, which was the OP, the CBCD pattern, and we see different acceleration on the CD, probably upper direction might be slowed down a bit, but market still will try to creep up and complete the 18 even area. So if you have existed positions, if you have the positions, you probably could try to keep them until the 18 even area at least, but control the risk, trying to track your stop orders and following the markets. For taking the new positions, this is really tricky situation. Maybe on the intraday charts, it is possible to try to take the position with attempt to catch the last actually swing to the target. But on the daily charts, nothing to do for the bulls as well. For the bears, actually, it's also not many things that you could do, because it's obviously bullish sentiment right now in the markets and context is bullish. So I don't see any chance for taking the short position by far here. Situation on the daily chart is more interesting to me, not even with the actually reaching of the XOP here, but take a look at the bigger picture. We have here the potential head and shoulders. So we could get the left shoulder ahead. XOP agrees with the neckline, which is actually a strong weekly resistance area. And that will be great if we start getting here the hand shoulders pattern, because it could become the important part of our long-term view. As we suggested that the gold market starts to reverse somewhere around the eve of the new year. So it's now really could happen. We should wait a bit more, but background is now forming, and it's really interesting and important, vital for our long-term view that we should get here some bullish reversal pattern. That's critical. And that's what most interesting to me right now. Speaking on the trading, as we said on the daily charts, not many things that we could do. On the intraday charts, here for the bears, nothing also to do. But if you would like to take the scalp long position, because this market stands strongly overbought, it could try to fall to the target, but showing minor pullbacks day by day. So something like this. So it will be acceleration, minor pullback, then as it called, is one step forward, two step forward, one step back. So that probably we will not see these kind of the jumps anymore, but market will still trying to keep going higher. And from that standpoint, well, it's a bit tricky, of course, when you're dealing with everybody, it's always tricky. But at the same time, you could try to catch one of the retracements. Most probable that will be either to the 1746 or 1730. Hardly we will get deep retracement. It's just because market hasn't reached yet the major target. That's why retracement should not be too deep. Previous 2 times it was minor retracement, but market was not at overbought. Currently, and it was at the eve of the big events, and it was reaction on the big events. Currently, big events have happened, and well, theoretically retracement might be a bit deeper. But anyway, this is 2 levels to watch for if you would like to. If you are not sure, then it would be better to you just sit on the hands, wait when the market hits the major target and resistance, and then try to enter on a major pullback that we should get. At least I hope that we will get. So that's actually in 2 words what we could do on gold. For the bears, guys, this is no chances. It's just you could just wait when maybe market will start forming something here. But it's again it is more chance that it will happen around 18 even. Once around 18 even, we will get some reversal pattern. You could try to step in to catch the downside pullback. But right now, I think that's well, we don't have any context suggesting that it's a good idea for taking the short position right now.